Hello and welcome to the week ahead video with me, David Madden. And before we take a look at the major events of next week, let's just take a quick recap of the events of the week just gone. We saw a broad rally in stock markets around the world, particularly US stock markets at the end of the week. This was largely driven by a decline in government bond yields across the board. We also saw in the middle of the week a continuation of the US dollar's wider rally where it hit a one-year high, but towards the back end of the week it pushed a bit lower on account of lower US government bond yields. Overall, the mood in the financial markets is more optimistic now than it was a few weeks ago. The previous concerns about high inflation and concerns about the Chinese property group Evergrande, they started to fade away, and to a lesser extent, so have the concerns about the prospect of the Federal Reserve tapering in the next few months, even though the latest Fed minutes showed the Federal Reserve could look to begin their tapering program from mid-November onwards. Now, the result has been a fairly decent rally in stock markets across the board. Looking at the US500, we can see it's been pushing higher in the last few sessions. There's been a steady increase in positive momentum. The levels we've seen recently on the US500 have been levels last seen in late-ish September. If you continue to hold above these three simple moving averages, it's likely the recent uptrend will continue. A move higher from here could see 4,483. If we do see any pullbacks in the US 500, support might be found from this simple moving average here, which comes into play in around 4,387. Looking towards the major events of next week, on Monday we have several important economic indicators from China. As I mentioned, China has been in the news in the last few weeks. Previously there were concerns about the very indebted property group Evergrande. Even though that issue has yet to be fully put to bed, the fears surrounding the indebted property company have faded for now. One of the major economies in the world that has a lot of trade with China is Australia. So in the week ahead, we have quarterly Chinese GDP, we have retail sales, fixed asset investment, and also industrial production readings. This is going to give us a good gauge of what's going on in the Chinese economy. In relation to the GDP numbers, it would be the third quarter GDP figures that will be posted. Keep in mind, in the first quarter, the Chinese economy grew by 18.3%. In the second quarter, it grew by 7.9%, so a sizable decline in the rate of output. After all, we've seen further evidence, we've seen a lot of reports to suggest that the economic rebound in China is coming off the boil. We're now going to be wondering, what sort of report are we going to see from China? Are we going to see another sharp decline in the growth rate? Also on the retail sales front, that's going to give us a good indication of internal consumer demand in China. Bearing in mind, in March of this year, the growth rate of our retail sales was over 34%, while in August, the most recent report, the report only grew by 2.5%. So it's a sizable slowdown in demand in China. With that, we're going to be finding out what's actually going on with the Chinese economy. That's likely to have a fairly influential on the Australian dollar, particularly this currency pair AUD/USD. I mentioned how we've had a broad pullback in the US dollar in the last couple of sessions. That's also beginning to help giving rise to the AUD/USD. The AUD/USD has been trending higher recently. In the last few hours, it's hit a level last seen in early September. So we're talking going on a 5-6 week high for AUD/USD. If you continue to hold above these three simple moving averages, it's likely the broader upward trend will continue. Moving higher from here, we could hit the target at 0.7477 and move beyond that, could see its target 0.7500. If you do see any moves to the downside in AUD/USD, support might come into play from this simple moving average here, which is in the region of 0.7383. Also next week, on Wednesday, we have important information from the UK. We have the latest CPI figures. CPI has been a hot topic across the board. The rebound in the global economy and in the UK economy has seen the cost of living CPI push higher. With that, we're going to be finding out what is kind of like demand like in the UK. Recently, pound dollar has been pushing higher, partially due to a broad sell-off in the US dollar in the last couple of sessions, but also because there's been a belief the British economy is doing relatively well. In the past couple of weeks, we've heard from Andrew Bailey, the head of the Bank of England, who said that essentially he's concerned about the high levels of inflation, suggesting that if inflation continues to rise, there might be an incentive to increase interest rates. We've also heard from Michael Saunders at the Bank of England, who said the financial markets were right to price in a rate hike sooner than expected. If we do see a continuation of this upward trend in GBP USD, we could look to retest one spot 37.33, and a break beyond that could see a target one spot 38.18. Any moves to the downside in GBP USD might find support from this zone here at one spot 35.68, and going below that we could look to retest one spot 35.42. That's all from me for this video. Thank you very much.
Thank you.